Welcome back, and thanks so much for joining us here on America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker. 419-794-3030 is the phone number. ARHQ.com is the website. You want to find out more about the team, find out more about the Retirement Team Action Plan, the events they've got going on. Set up a time to speak with them. That is the website. Don't forget, that is ARHQ.com. Despite all the talk of volatility, there is no denying that the market is, in fact, red hot. But is it the best place to put your money? That is the question Yahoo Finance posed to hedge fund investment manager Karen Carniol-Tambor.
So I think there's a lot of reason to believe that the stock market has room to run, and that the most negative aspect is, valuations have gotten somewhat stretched, but not that stretched. In the most stretched corners of the market, when you look at things like AI, valuations have gone up somewhat, but also to a large extent have kept up with actual earnings increases. On the other hand, what you can't ignore is that people's exposure to the stock market today is radically different than normal. People are very, very exposed to the stock market. So almost any portfolio I look at, what you see is that almost any source of diversification people used to have has really eroded because you've had such a run.
So let's talk about diversification, Nolan. How do you help clients stay diversified when market conditions are, quite frankly, unpredictable and the stock market is soaring?
Yeah, it's great to see the market's doing so well again this year like it did last year. And, that can lead to over optimism, I think, from some investors. And look, I'll be the first to say that I hope the market keeps going up. I know it's a lot easier to meet with making money and the market's doing well. And I think there's a lot of things to be positive about, right? So we've got the elections over. We've got people that are optimistic about making America great again. We've got the fact that the Federal Reserve has been cutting interest rates, which historically in a non-crisis environment, can lead to some good things. But, I would caution you about why you shouldn't necessarily go all in on the stock market, depending upon where you're at in your retirement journey. So, for my son who's young, works at the company in his 401k, I'd say, buddy, go all in. I know he is pretty aggressive in his 401k. And right now, whether the market goes up or down in the next 5 years doesn't have a big impact one way or another on him. He's at a point where his goal is to save and accumulate and acquire as many shares of great quality companies as he can, because when he gets to retirement in his 60s, that's when he's going to need the money. But I have another gentleman that actually comes to mind that recently we met with, and I would define his investment portfolio that he had with me as moderate tactical. And so what that means is, in terms of level of risk, of 0 is putting all of your money in the bank, and 100 is investing in ultra high risk, maybe say cryptocurrency. Moderate would be a 50 level risk. So it's kind of like driving a car 50 miles an hour. You're not going extremely fast, but at the same time, you're not going very slow either. The second part of it is I use the word tactical. It's a moderate tactical investment strategy. Tactical means we're looking at market conditions, and based upon the market conditions, it allows us to either push the gas pedal down a little bit so we can speed up to 65 miles an hour, or as the weather, like here in Northwest Ohio, can deteriorate, when the economic conditions on Wall Street deteriorate, we could slow down to 35 or 40 miles an hour. And, after the election, we had that week that the market had rung up, and what he wanted to know is that should he change his profile to 100% aggressive equity, because he had a lot of optimism now that the election was over. And the problem is with him close to or in retirement time, it only takes something that's unexpected to happen before the markets can change in a hurry. Mm-hmm. It can take years for these market bull runs to build up money, but it's things like a 9/11, it's things like a COVID, it's like the dot-com bubble burst. In those type of situations, what happens is the markets can change in a hurry, and unless you have run the fire safety drill and you know what your exit strategy, you can really get hurt in the market. So if we look at the market and we think about the basics of investing, which is buy low, sell high, again, right now what you have is the market is at or close to record level highs. If you're in retirement time, with the market at record level highs, could be a good opportunity, or maybe you'd want to take some of your profits off the table. Maybe there's the car that you've been driving around for a long time and you're way ahead in your financial accounts. maybe now's the time to take some profits, get that vehicle that you need. Maybe if you had some of those home projects that you wanted to do, maybe there was that trip or travel plans or a vacation that you've always wanted to do. Maybe you're good. Maybe your income is fine. Maybe what you want to do is you want to bulk up a little bit more on your more reliable income. So you can take money from your equity account, move it over into things that are protected against market losses. And those are the type of things I think that you should be taking a look at. The philosophy that we put together is called the independent income system, where we have these different buckets of money designed for different things. And, I would say, for most retirees, I'm always going to be cautiously optimistic about market conditions, right? So again, I hope the market does really well. I think for those investors who have time on their side, the market will work out really well for them. At the same time, those people that are going to need the money in the short term, you want to be a little bit more defensive in this. There is a good article if you want to go on the internet and Google Buy American IM. And this is an article that was written by Warren Buffett. It was October 16th of 2008. So if we can go back in time to 2008 in October, we were in one of the big financial crises that we had with the market was down significantly. And what he did is he wrote an article, and in the article what he talked about is why you should be investing with the market being down. Now, had you read that article in October, and you went ahead and followed Warren's advice and invested in 2008, you would have lost a fairly substantial amount of your money because the market continued to go down until March of 2009. So one might have looked back at that article and said, Warren, I can't believe that you told me to get invested. What a terrible time to take that advice. But had you stayed invested, and if you looked at it by the following October, the market was higher than where it was the October before. And if you looked at it and stayed invested till today, you're hundreds of percent higher over time by sticking with that strategy. So again, equities are something that you shouldn't be afraid of. It's a matter of knowing what you own. The other thing I like about his article is he talks about what to buy. And in talking about what he likes to buy is he talked about, looking at companies that have a competitive advantage, companies that are in good financial situations. So he said, to be sure, investors right to be wary of highly leveraged entities or businesses in weak competitive position. I think right now that article sounds so true. And it's important, again, to know what you own. So you don't necessarily need to be fearful of the market. If you've been conservative and you've missed out on the last couple of years, or if you're feeling like you're missed out and you want to go all in on the market, I'd love to have a conversation with you and talk to you about what you own and help you be able to identify opportunities, but not get you in a situation where you get hurt if and when there's a major market downturn. That's something that we can do. So if you want to know how you should be positioned in the stock market, let me know. We can go over putting that portfolio analysis together for you.
You can find out more about the independent income system actually by just opening up a tab and Googling those very words, independent income system. There's a video there you can check out, or better yet, you can see how it can apply to you, for you, and with you as part of the Retirement Team Action Plan by going to arhq.com, setting up a time to speak with the guys at America's Retirement Headquarters. You can also do the same, find out more about the independent income system and how to create that Retirement Team Action Plan by giving a call, 419-794-3030.